Ira Epstein with your SPDR ETF and a bit of a stock market wrap-up. And this is for Tuesday. We're now at April 5th, 2022. I want to remind everyone, I've done a very in-depth report for you. It's a video report on the S&P. I covered the monthly, the weekly, the daily charts. Then I give you what our own term is price counts, where the market might be headed. Very important to look at this. And then the seasonal factors from the Moore Research Center. And there is a buy coming up right around the corner here in the S&P, according to them. It has worked 15 out of 15 years. That does not mean it'll work 16 out of 16 years. Never go by past history. History is not a guarantee of the future. It gives you ideas, and that's where it should end. Don't ever bet that something's going to keep going, okay? Been doing this all my life. After I go in for the 16th year is the loser. But let's keep going. I then discuss inversions. We've seen that on the interest rate. And then a filter on the inversion. I think it's called the SAM rule. What is that? Okay, I want you to find out. Take your cursor, move it up here, and at any point during this video, you can do that or come back to it. And when you do so, there'll be an icon, you fill out the info, and you'll go right into the video, okay? Take a look at it. I think you'll get an education on what I'm saying. So today was all about Twitter, as you know. The past 48 hours have been about Twitter. I haven't been covering Twitter at all. I've been covering Facebook and some of the others. BITO I had been covering, but BITO's filled the gap that I was looking for. So I decided, let's remove that and cover Twitter. So this is interesting as can be. This is a case study in Bollinger Bands. Look at the sideways action of the market, okay? Let's go to the next chart. You can see that you've broken out the past 2 days, but let's take it backwards. Higher lows, higher highs. You know as much as I do that Elon Musk is going to sit there and decide to buy nearly 10% of the company, but he does. Then the market comes up. Who is this most important to? Ex-President Trump. And you'll say, why? Not one person's mentioned it. What if, as Elon Musk has done, he sends out a twit, how you like that, to his 80 million followers. What do they think about this edit button that is going on this, that suddenly Twitter can say who can have the account, who can't have an account, what they can say? Does that belong? Let's assume the people are smart enough to say, within reason, it might be too tight. Maybe you're entitled to your points of view on X, Y, Z. Whatever the heck it is. I don't care. It doesn't have to be politics. It can be anything. What are they excluding? How's it done? It's going to be important. Because if you think about it, there's no platform that ex-President Trump has. He really doesn't. He's a silent man without a platform at this point. He hopes every now and then to say something to get himself going. But the only thing about him in the press are the lawsuits. You might not like to hear that, Mr. Trump, President Trump. It's the reality. So we come up, you can see what the market's done. So that could be interesting. Why did the market stop there and back off today? Let's find out a few things. The very first thing we put on every chart is first the swing line. It's been bullish. If you need proof of that, I can come back, I think, on the chart a day. Let's see. Yeah, there you go. The swing line has been up for a while. It's had higher lows, higher highs. You can't argue that, just the way that it is. I certainly didn't see this coming. But there is a way that I was watching it, but just was so boring, I said, what am I doing there? The first resistance point was hit suddenly, and I wasn't even paying attention. The 100-day average, okay. Maybe the market's going to come alive here. That gets everybody's attention. And the reason it happened is everybody, because the richest man in the world just bought 9.2% of the market. Where do you think the first resistance is going to be if you see nothing else on the chart? You went up and you did pay attention to the 100-day average. If you go through that, the next important moving average, the only one above the market remaining, is the 200. Can we get there? This is Monday's action. Lo and behold, you hit it and you back off. That's all that my point is. Where are the Bollinger Bands? Let's look at them right here. You have a market that have been going sideways forever. This gets my attention when it comes out. And I'm sure there were traders that were trying to catch this move. I don't think anybody saw the Musk move unless they had inside information. But you're looking at this and you're going, okay, it's sticking its head out, but is there any reason to do anything? Well, we'll come to the next chart with the enhanced Bollinger Bands. There was. I just wasn't watching the market. What's the purpose of an enhanced Bollinger Band? To tell you something else is going on. The first thing the market does with it is both numbers have to start going sideways over 80. At first, they're overbought as can be. You need several days of that to happen. Now you get the market's attention. In most cases, you fail at the first challenge of a 100-day average and a Bollinger Band. You'll hear me say that over and over on the charts. You get there, and boy, I'd have felt really good. I called it. But it's still embedded. What are you supposed to be doing right here? If you've taken my course, run your numbers, you will see if what I teach wasn't happening there. I certainly wasn't even watching it. The market pulls back, and as long as it's embedded, you're a buyer until the red line closes under 80, and your objective is going to be, again, the upper Bollinger Band. The market pulls back, plenty of time in here. Because you've already gotten a little bit of width here, I'm still looking at the Bollinger Band. Market comes up, and this is April 1st, Friday. I wouldn't have seen anything on this other than, long position, flirting with losing the embedded reading. It's a 79. You need a 79. You need to be under a 79 reading to be out. And the first thing I'd have said, and I do this all the time, is unless this market's up and away come Monday morning, you got a problem, because this market closed near the lows. If it opens steady, you're probably going to lose the embedded reading. And that's how I would have looked at it. But the news broke, and the market goes. So the lowest traders, if they had an order in to sell the Bollinger Band, was that day's low, which was a breakaway. Now the market's got itself at the upper band. It, in my opinion, will pull back into this band within the next several days. But that's the anatomy of a trade. And that is what I teach in the Enhanced Bollinger Band course. It's classic. I didn't catch it. I wasn't even looking at Twitter. But that's how it works. Here's one that I did catch for you. I said as you came up here, this reminds me of Twitter, by the way, how it went through these numbers and up there. I know something about this industry. It stinks. I mean, it smells great when you're in the popcorn area. I love that. But as a business maker, it's not been very good. Doesn't have a history. So here it gets up to 34, 33, and I sang it here. I said, I think the pros are just going to bail on this right here. I didn't say go short. I said, I think anyone long is going to run. That looks like pretty good. You've already given back in the stock, what, $12, a third of the value. Apple, you watch until the red line closes under 79, it's still in a bull mode. It's not in a bear mode. It's showing the first signs of, it's weakening. But is that weakening going to be proven? You've got to get that red line to stay under 79. Then you open up the target for down here again. I think the pros came out in the first run up here. I mentioned that when you had the embedded reading, they took off part of their position. I think they're just sitting with part right now. In XLF, you're still looking weak in all this. This is the financial service sector, interest rates. The curve yield's not making banks money is the problem. Now, I'm very aware that banks don't go into the market and borrow at a 2% rate and lend out at a 10. They do it at a 2-month rate, a 3-month rate at most cases, and they're doing the other. They're making the money there, but it's not the traditional way, and that's got the market concerned. We're going to get bank earnings, by the way, next, the 13th? They come out. So a week from, today's the 5th. A week from tomorrow, they'll be coming out. Disney. I said I thought you'd have trouble at the 18-day average. You are. So you'd say, well, Ira, is that bearish? It is, but you're already oversold. I don't know that there's a lot of downside, and I'll tell you. I was looking at Carnival bookings today. They're the biggest they've been since 2019, a 1-week record made today, this week. That's unbelievable. I mean, people want to take these things. So, I'm not overly bearish on Disney long term. Short term, you hit the upper Bollinger Band. What more do you want from it in an overbought market? Now you're going to churn around that 18-day average. Short-term move is bearish until you get back over 139.26. XLI, this is where you hit the upper band. That was where the first money was taken off the table. You rallied, you lost the embedded reading, all this in the enhanced Bollinger Band course. Target right here. You just hit your target. I don't care what it does from here. The target's been hit. So it's bearish now until today's high is taken out. You could be headed to 98.40, but in order to get short, when you reopen in the morning, if you're not short already, you're probably going to be under a 30 reading unless you get a pop in the market. That means you're oversold right away. So we come over next to the semiconductor area. I hope you're watching what is going on with the punishment, good punishment on Russia. They can forget getting chips from anybody in the West. That's over. They're going to have to hope they can get their chips that they need from China, and they need them desperately because they're out of the SWIFT banking system. Their credit card chips with Visa, MasterCard, and the like don't work anymore. That's all been shut off. And they've got to give out their new cards, which runs on a system out of China, and they need to get the chips to get that to the population. I've given you a history. Lower highs, lower lows. Market probably headed to the 185.37 level. Is it still bearish with a 30.91? Remember, it's going to be oversold again very quickly here tomorrow. Probably get under the 30 level. The home builders, the poor guys are annihilated right now. They've got inflation on product. They have a wonderful demand base for homes. It is powerful. They're fighting mortgages, but mortgage rates aren't going to do what you think they're going to do. Everybody's scaring you that mortgage rates are going to keep going up. I have my doubts about it. The market will gear in on the 10-year note. A lot of people don't think it's going more than 3% in the 10-year. It's the front end that the Fed's going to goose, and the back end the market's going to get nervous about because few people believe that really the Fed's going to have a soft landing. I mean, I pray to God that's the case. And in my report that I said, if you click up there, I talk about it. And one of the factors is to how you measure the low and the unemployment number as a filter on the inversion. I discuss it. It's very simple, actually. In XLE, you've got a higher high, lower low, overbought, c'est la vie. GLD, bearish right now. But if you take out right now, if you were to take out on Wednesday or Thursday today's high, I think wherever that upper Bollinger Band is, you've got a new target in the market. If the market continues down, 177.42 is a very possible number. Here, you go up to the upper Bollinger Band. What are you supposed to do the way I teach charting? You're overbought. So long. Adios if you're long. And the market probably wants to back off to the 18-day average or lower. You're caught in this narrowness of this band. This is not the place to be right now. Copper. Today was an important day in the market. You're losing the embedded reading, okay? 79.42 is not lost. It'll probably be lost on the opener, which means you can drop back here. Am I bearish, copper? Not in your wildest dream. But this was the end of this particular run, I think, to the upside. We'll see if I'm right or wrong on it. And no, I'm not bearish. I think you're going way up in this market over time. And that's because copper as a commodity is in very short supply. I just saw the numbers on Codelco, and I saw the numbers today on Chile, how much they're producing. They're a big shortage. People have not been investing in the mines. Certain countries don't like that it pollutes the land as you do this. So there's problems with it. And of course, you're going to lose out of Russia all these kind of different materials that they can produce. TLT, I know interest rates, what they did today, but the way I teach charting, you got to 128.29 at 127.97. That's where I'm expecting the big boys to show up and support the market. Not buy it, cover shorts, a very big difference. The market is bearish right now, momentum down, trend down. And here's what I'm seeing in this. I'm seeing waving in the dollar, and I'm seeing waving in the euro. I think they're just caught in these ranges of now going upper band, lower band, they're going nowhere when you get away from them 2-3 days out. But that's my guess. If I knew, I would tell you. You've heard me talk a lot tonight about enhanced Bollinger Bands. It's simple to learn what I'm teaching. Simple. Give yourself a couple of hours, take a look at the videos I create, and you're there. It's that simple. Get a doctorate degree. It's different than you think you know about Bollinger Bands. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.